Good morning everyone and welcome to a new video, a new morning brief here with Sublime Traders. I'm Logical Orange, and in today's video we are going to take a look at the current situation with Bitcoin, which has touched briefly the 40k level. That is a very heavy psychological level. Now we are going to take a look at several time frames and see what's going on with the market. So starting with the weekly chart, which is looking slightly bullish right now. We have had two green candles last week. We have also touched with the weekly candle. We have touched the 29.4 level, and you will see in smaller time frames that this can also be what can be called as a spring in the wake of accumulation distribution schematic. However, we also have multiple formations right here, so we are going to talk about them and what can happen next. So on the weekly, as you can see, we also have the main range, which is between 40k and about 30k, the lower part. This is the range we have been in for the last months, so 17th May, and we also have a descending channel that we broke yesterday, which is a very good thing. Now the week that we started today has started in a very good manner, and this can spell continuation. However, don't forget that we have this extreme resistance right here at 40k. So 40k right now, as I said, psychological level, extremely heavy, extremely protected by bears for now, and we can continue and reject once more until we have the volume to break it. But I want to show you something. So the current weekly candle, looking at it, we can see the volume that is associated with it, and we can see that the volume is really small and the price move is really big for that kind of volume, which means that the sellers are getting out of the way of the buyers. So we are managing to push the price with very low volume, also meaning that the market is turning slightly bearish. So the sell orders are disappearing, they are moving upwards and upwards, or disappearing altogether, leaving the way for the price to move up. Very good thing. We have also been, when we tested last week, when we tested the higher low, because it wasn't a lower low, so it was a higher low compared to 21st of June. So we had created a higher low, a slightly higher low. When we did that, we were also supported by the 100 EMA, which is here, and a long trend line that spanned over the weekly chart. I showed you guys in previous videos how I have drawn this, and of course we closed the candle in the range that was considered as a support range at the 30 to 32k area. So extremely important. This happened, we rejected. Right now you will see in smaller time frames that the point of control is a bit higher, and this is also a good thing because we can possibly base some trades on it if the price retests the top part of the descending channel. So let's move to the daily and see what we can see in a more zoomed chart. So I'm now on the daily. Daily allows us to see the chart in a more zoomed in manner. The same descending channel, of course, the EMAs, and what is very important here is that we managed to close above the 50 daily, which was almost at the same price range with the point of control, which is here, right here, so 34k. We managed to close above it, and right now we have been pumping. We have a candle that has almost a quarter of its body as a wick, and it rejected on the 40k level. The trade that you see here was part of a previous video that I published I think last week. It was called the turtle strategy, and which basically meant that when you are in doubt, prepare two trades, one in for long and one for short, and they well, watch the video. It clearly explains the strategy. Now it's not I'm not going to talk about it, I'm just going to talk about the formation. So we closed above the 50, a very good move for the bulls. As I have already stated, for the weekly we haven't had a lot of volume, so we managed to pull the price up with very little volume, which means that sellers are getting out of our way. Good thing altogether. Now the 61 is also acquired as so the candle has closed, the price has closed above it. Now what we need to worry about, the only thing that we need to worry about right now is this 40k level right here that can cause some multiple rejections. As we know, we have tried to break it just after the big drop right here, and this of course didn't work. We have formed several candles with long wicks right here, high volatility. Now we don't have that case because the market slowed down a lot, and now we are trying to break it with low volume. And if we are here with low volume, it means that if we get good volume, then we have a very good chance to break. Now let's also talk a bit about fundamentals. Bitcoin has a lot of positive fundamentals. The big guys are accumulating a lot of Bitcoin and Ethereum, and it is a very good thing for Bitcoin. Now when they do, it doesn't necessarily mean that the market moves, because the big guys use services that are named OTC. For the guys that don't know what OTC means, it means over the desk. And how an OTC desk works, it's basically they have partnerships with a lot of exchanges and brokers and liquidity providers. And let's say I want to buy 10 million worth of Bitcoin at the same price. I go to an OTC desk. The OTC desk will ask his providers for the best price. He will make me the offer, and I will basically buy on 10 or even 20 different sources, so I don't really move the price, and I get the same deal everywhere. So I managed to buy my 10 million at the same exact level. So for example, if I want to buy here, using an OTC, I have a lot of chances to getting my 10 million executed as a buy, as an entry, a single entry or multiple entries at around a very short range of 33 or 34, which means I get a very good price for my whole investment. So this is the way the OTC work. And this is also a reason why, because it's spread all over the exchanges, we don't necessarily see a lot of moves into the price action. So the price can move slightly, but the big guy has bought a lot. So we didn't buy a lot from one exchange that would have caused the exchange to spike, and a slight decorrelation would have happened with other exchanges, and the bots would have stepped in and basically eaten up the difference through market making. So this is the way it works for OTCs. Now, extremely important, as I said, the 40k level. Now let's move to the 4-hourly. 4-hourly, right here we have a clear view of how things work. The EMAs are basically getting over each other, and we have the fastest one, the 22 moving average, which has crossed all the other EMAs. This is the beginning of the upward move, if we only look from the EMA standpoint, the point of control right here extremely clear. We have closed and pumped from this level. The descending channel is also invalidated for now. I also highlighted a previous resistance area right here, which was broken and now acts as a support. So the current situation on the 4-hourly is that we are going to pass into a small accumulation or distribution phase. We are not sure what this is yet right now. So this area right here, is a pause for the price right now. The next move we need to make in order to continue our ascent is, of course, breaking and closing above the 40k level. Extremely important level. Let's take a look at the waves. So the waves right now are on the high side, of course. No clear formation right now because we need to form some clouds in order to see how the price can go. We need to draw some divergences or some trend lines that can tell us where the price can go. I saw that on the daily we have a bullish divergence right here. So the bullish divergence is, of course, based on the fact that we have had this drop right here, and well, the waves, as you guys know, are RSI and multiple other oscillators combined. Well, we have a divergence right here. The angle is not very steep, however it is still a divergence, and they almost always play out. You can also see in the example we had the bearish divergence right here, and it played out very, very effectively. It happened at the beginning of the drop, so 16th of April. This was more or less the beginning of the drop. So imagine that the same thing. So divergence right here, huge drop. Now we have a bullish divergence right here, and we can expect, we are on the daily, I repeat, we can expect the same thing more or less to happen on the upside. So let's close down the waves and see what potential targets we have if we break the 40k. So 40k, of course, first level to break, meaning that a huge bullish validation is done. We get out of this range. Extremely important, we get out of this range right here. I still consider it a range, even though we have this descending channel that has been forming here. The 30-40k range is still extremely important. Once we break above it, we have this trend line right here, which is a weekly trend line, and that we would need to watch for. It will at some point converge with the 200 EMA on the daily. 200 EMA on the daily is very heavy resistance, and once broken would provide extremely heavy support. So the 200 EMA is a monster support resistance. If we break that, guys, well, we are going up and up, and we will be testing the limits that we know. So let me plot the limits that we know right now, just playing on what I visually see for this. So these would be the limits right here. Of course, more or less the shoulders that we have had, the all-time high. I'm always almost always checking for full bodies and not wicks. You guys know why I do that. So this would be the levels that we would need to break in order to continue. We have a lot of resistances to break, but as I said, we've managed to pull out of this with low volume, meaning that the sellers are weakening and they are leaving the way for us to continue. Let's see what happens here, because right now we have had a rejection. A lot of orders were placed here. A lot of liquidations happened here also. So a lot of shorts were liquidated, meaning we had a mechanical move right here. So an automatic mechanical move means that we have had a cascade of liquidations that created this rejection wick right here. So the levels, here are the levels on the 4-hourly. Right now, I think we need to wait a bit, not long. I think today or tomorrow we will have the answer of where the price will be going from here. What we need to watch out for is this type of candle. You see this candle right here, this dodgy candle, textbook dodgy candle. So two symmetrical wicks and a small body. If we get this around this area, it means that we might reject, and it means that with the low volume that we have, we cannot continue because the sellers are starting to stop the buys. So this is the type of candle that we need to look for. If we look on the Heikin-Ashi chart, let's check and see how it looks. So as I said, the last time we have had a dodgy candle right here. For now we are looking very healthy. This candle on the Heikin-Ashi chart does not necessarily mean that the movement will stop. We can even have 5, 6, 7, 8, 10 candles like this with rejection wicks like this. If you guys can see on the downside, last time we had a lot of candles that looked like this. So we could have said, okay, it's going to stop here, but no, it continued with the same type of candle and it continued until we finally reached the 30k bottom. So of course we can have this type of candle and we can continue for a very long time. In my opinion, this is just the beginning. We are just being rejected at the 40k. As I said, we just need some volume, and the market sentiment is slightly shifting from fear away from fear, which is a very good thing, of course, also because we need retails to help this market up. We need to get this market up ourselves, because the whales are buying whatever happens. A lot of whales that have sold around this level are now buying right here. They are rebuying in, and they are also helping the market to get up. They have all the interest for the market to get up. So this is the daily. Now on the let me pass on the 4-hour again. So the 4-hour Heikin-Ashi also looking very, very strong, getting only green candles right here. The point of control confirmed with this candle right here. Now we have had this dodgy right here, and you would have said, okay, maybe we reverse from here, but dodges on Heikin-Ashi must not be interpreted alone. You need to look for multiple other indicators. You cannot interpret a Heikin-Ashi chart on its own. Even if it says a lot, you still need some other confirmations. Now for this video, I think that there's not more to be said right now. We just touched 40k. We need to see what happens next. Candles are looking great. Potential trades will be posted, of course. I will prioritize small time frames still, because of this 40k level right here. Once we approach it, I can have a pivot point for my stop loss. I can have an entry. I can project take profits after. What I need now, and why I will not enter exactly in this area, is because I have nothing to base my stop loss on. So for example, if I were to place a trade right here, my stop loss would be extremely far. So I would be basically in the middle of the sea, and I do not like it. I prefer that the price confirms the 40k. We don't profit for the difference that is here. Let's say, let me measure it. So we don't profit for 4%, but we, in exchange, we can have a better entry. that will provide us with a good stop loss and a good take profits for the continuation. What I'm looking for in this type of trades on the 4-hourly charts are good entries that provide good stop losses, that also provide good risk-reward ratios. So this is my update for Bitcoin today, guys. If you guys have questions or if you want me to analyze another coin, please do this on the chat or write to me on a private message. This is all for today. Thank you for watching and see you on the next one. Follow our signals, we gon' put you right there. Like never seen before, you gon' be out of here.